Okay.
Good morning, everyone. This is Small Business Payroll. We'll be starting in about 1 minute at 9 a.m. Good morning, everyone. Welcome to Small Business Payroll with Tanya Luken. I'm Donna McCown, the Operations Manager for the Maricopa SBDC. We'd like to welcome you all. I'm going to turn it over right now to Marcus Brown, who is one of our business analysts, and he'll open up our session.
Thank you, Donna. Good morning, everyone, and we're glad to have you today at Small Business Payroll. As Donna said, I'm Marcus Brown. I'm a business analyst with the Maricopa Small Business Development Center, a larger part of America's SBDC. It's a program, a part of the SBA, and we are hosted by Maricopa Community Colleges. Before we get into our wonderful training with the wonderful Tanya Luken, I just wanted to touch on a few couple things first. Just so you know, Maricopa SBDC offers wonderful services and trainings like this to no fee to all business owners throughout the entire county of Maricopa. Some of the ways our clients tend to work with us is through counseling, where whether you're starting a business or you're just trying to grow or your business is struggling, we work with you in areas of disaster assistance relief, helping you buy and sell your business, marketing, also learning more about how to get into a financial review. And for those of you that are in a particular specialty, we help you with areas of technology, manufacturing. If you're looking to sell your business nationally, we help with federal contracting, and also we assist clients through international trade and exporting. Now, for those of you that have not used our services before, all our clients have the opportunity to receive market research. So if you're in need of any information to help you with a business plan, or learn more about industry benchmarks, or possibly thinking about selling your business or seeing what the market's currently active, we offer those no fee of charge to our clients. And we are happy to have partners like Tanya here to lead out wonderful training sessions like this. A lot of times these sessions are either led by a community partner or by one of our fellow analysts. And while this is happening right now, I just want to let you know about a future training we're going to have down the pipeline beginning on November the 10th. Through our partnership with Arizona Commerce Authority, we are going to be holding a training called Numbers Everywhere. Our opportunity to help you, the business owner, learn more about some small basics for small business accounting, and also learning about what numbers are vital to you as you're learning to grow more in your direction and growing your business. For all those who want to be a part of it, I highly suggest you register prior to November the 10th. If you are looking for a Zoom link, you will not receive it until the Monday beforehand. So the first come, first serve, and it's going to be a wonderful event led by one of our fellow business analysts as well. And if you have any questions or want to learn more about SBDC, we would highly encourage you to contact us. Our number is here at 480-784-0590, or you can visit our website at www.maricopa-sbdc.com to request counseling, learn more about our trainings, and just get more information about the wonderful things we're doing. And for all those of you who are still having difficulty through the time of the pandemic, we are still here to assist you, and we would love to talk to you more in depth after the presentation, and also be able to support you if you have any questions similar to this. But now, since the spiel is done, I want to yield my time to our wonderful presenter from Tanya Luken CPA PC. Tanya, take it away.
Thanks, Marcus. All right, let me get my slides going. Okay, you see it? We're good? Okay, I'm going to assume so unless someone stops me. So I just want to say a couple things this morning. First, I'm having technical difficulty with my internet. It's very COVID times at my house today. So if I drop out, just hang in there for a minute and I'll call back in. So The second thing I wanted to say is feel free to ask questions in the Q&A. Try to use the Q&A instead of the chat, because I'll see those as they come through and I'll stop and answer them as we go through it. Okay, and I'm a firm believer that there is no such thing as stupid questions, so ask away. Usually there's a lot of dialogue when I do this in person, so this format kind of makes that a little bit more challenging, but I would still encourage you ask whatever you want to know. Okay, so just a quick disclaimer. The purpose of this presentation is to just enhance your knowledge. It's not designed to be specific advice for you or your business. Some things we're going to discuss today is we're going to talk about the difference between an employee versus a contractor, how to hire employees, exempt versus non-exempt employees, which is a fancy way of saying hourly or salary, and workers' compensation, payroll taxes, how you work with the payroll company, and the Form 1099 miscellaneous, which is actually changing to a Form 1099 NEC. So we'll talk about that, and the PPP FAQs. So just a couple of things that are going on in the world of PPP. A couple of quick payroll terms. So when I say FICA, I mean the Federal Insurance Contributions Act. So if any of you have ever received a paycheck in the past, you'll notice that Medicare and Social Security have come out of your check. So when I was 14, I got my first job in Nebraska working at a place called Peony Park, which was an amusement park in Omaha. And I got my first paycheck and I went home and I went up to my dad. I'm like, what's a FICA? And why did they take all my money? So FICA is Medicare and Social Security that comes out of your paycheck. That gets matched dollar for dollar up to the Social Security limit by employers. So if you have $7.65 come out of your bank account, your employer matches that $7.65. EE is a quick way that we abbreviate employee. ER is a way that we abbreviate employer. FUTA stands for the Federal Unemployment Tax Act. SUI or SUTA stands for State Unemployment Insurance or State Unemployment Tax Act. They're interchangeable. Some people say SUI, some people say SUTA. I'm a SUI person, so you'll hear me say SUI. IRS, our favorites, the Internal Revenue Service. ADOR is the Arizona Department of Revenue, and DES is the Department of Economic Security. So the IRS, ADOR, and DES are the ones that regulate payroll taxes for employers. Okay, so very quickly, I'm just going to hit the highlight here because we're going to talk about it in depth in a minute. But this is very quickly how payroll taxes work. So if you have an employee that earns $1,000, their gross pay, $1,000, their Medicare and Social Security, their Medicare and Social Security come out of their paycheck, $62 for FICA, $14.50 for Medicare. Their federal unemployment is $10. Their state withholding is $3. Their net pay here, $9.10 or $910.50. The employer has to match the FICA for the Social Security portion at $62, the Medicare at $14.50. They also pay federal unemployment of $8 and state unemployment of $23. So the employer pays $107.50. The total cost of this payroll is $1,107.50. Now remember, we agreed to pay our employee only $1,000. So as an employer, we're paying $107.50 on top of the $1,000 to our employee, because we have an employee. So this is the reason that people try, like if you had a contractor, for example, you would just write them a check for $1,000 and be done. So that's why some people try to categorize employees as contractors, but it's very important that you know the difference and you classify employees correctly. So an employee versus a contractor. As an employer, you're responsible for determining if someone's an employee or a contractor. If you determine that they're an employee, you're responsible for withholding their payroll taxes. You must match their FICA and pay the unemployment. If you determine them to be an independent contractor, you may not be required to withhold taxes. Ordinarily, you're not required, and you're not required to pay any FICA or unemployment. It may be less expensive to hire an independent contractor, but if you incorrectly classify someone, the penalties are steep. So in my example here, if you were to incorrectly classify this employee, not only would you be responsible for the employer taxes of $107, but you would also be responsible for these taxes that should have been deducted from your employee's paycheck, but weren't, okay? So that like doubles your penalty right there. Okay, there are 3 tests to determine if someone is an employee or a contractor. So the first one is behavioral control, the second one is financial control, and the third one is relationships of the parties. So let's talk about all of those. Okay, behavioral control is the right to direct or control how the worker does the work, when and where they do the work, the tools and equipment they use, the supplies and services they provide or use, who controls the work, and who trains the worker, right? So as an employer, you need to ask yourself, does my business have the right to direct and control how the worker does the work that I hired them to do? Well, clearly, if you hire an employee, you're going to tell them this is the way that we do things in our company. So does that mean that when you train an employee on your methods, does that mean that you're controlling their work? Probably. Do you direct when and where they do the work? Do you tell them where, pre-COVID times, do you tell them they have to come to the office from this time to this time? Probably. Do you determine what tools or equipment are used and where purchases and supplies, or and where to purchase supplies and services? So for example, I own an accounting firm. So let's say that I'm going to hire someone to do some work because I have overflow work and I need extra help. So someone comes to my office and I say, okay, you have to work 8 to 5, Monday through Friday, and you're going to sit at this desk and use this computer that I'm giving you and this software that I purchased for you. So in that instance, would you guess that they're an employee? I would say yes, because I'm controlling when and where they work, what tools and equipment they're doing to use the work, and what supplies and services they're doing. If you train the worker, generally, you have the right to control what will be done and how it will be done, and the worker is an employee. So if you train them to do something, so if I were to hire someone and then train them to be an accountant, then generally they would be an employee. Okay, financial control. So financial control is who controls the business aspect of the work. Is it an employer with employees or an independent contractor who are in business for themselves? Factors include a significant investment, unreimbursed expenses, the opportunity for profit and loss, are the services available to the market, and the method of payment. So the IRS wrote these couple of slides, which is why they're like, the words are very particular. But let's talk about each one of these. So we'll go back to my example. So in my example, an employer comes, or a person comes into my office and they want to do, like I've advertised for someone to do overflow work. So think about significant investment. Is there a lot of investment that I've put in to that person? Dollar-wise, no. It's not like they came to me with their own computer, for example. Unreimbursed expenses. So let's say that I do hire that person and they drive their car to a client's office to do work. And if I reimburse them for their miles, does that make them an employee? It actually does. If they decide that they need a certain kind of pencil to use, which shockingly most accountants are very particular about their pencils, then they go out and buy their particular pencil and submit the receipt for reimbursement, are they an employee? Yes, because they're being reimbursed for their expenses. The opportunity for profit and loss. So this one is kind of tricky, but makes sense when it's explained. So if that same person that came into my office then decided that they were going to have clients on the side, they have an opportunity for profit or loss, because they have an opportunity to bill more money or bill more time or collect more money from other people. And they have their own opportunity for profit and loss. They can decide how much time they're available to their other clients versus how much time they're available to me. So in that instance, they would be a contractor. Okay. Method of payment is just how often do you pay them? Do they send you an invoice and then you pay the invoice? Or are you tracking their time every 2 weeks and writing them a check? Okay. So if you're paying them, you can pay them in intervals, like every 2 weeks or every month. But at the same time, you want to make sure that they're submitting an invoice to you. So George asked how you classify landscapers. So George, it's a good question, and it depends. So in this instant, you would look at here, if they're providing their own tools. So if they have their own mowers and trailers and you know, like those hedge clippers and things, like if they have all of those things themselves, then I would say they could be a contractor, right? If you just tell them like, hey, here's a job, you know, there's a job at Tanya's house today, go do that one, then that's not necessarily making them an employee, because at the same time, are you reimbursing them for their gas or their miles to come to my house? And then the opportunity for profit and loss, do they have other, do they provide services to people outside of your company? Okay, so it kind of depends. The last test is the relationship with the worker. So is there a written contract? Do you provide the worker with benefits such as insurance, like health insurance or a pension? Does the worker provide key services that are important to your business? Is the work expected to be permanent? And then lastly, you can fill out a form called an SSA and send it to the IRS, and they will tell you if someone's an employee or a contractor, which is not my preference. So I'm just going to put that out there. So one thing that you want to like decide is, the biggest thing is the opportunity for profit and loss. So for example, like George, in your example, your question, if that company is registered with, you know, the ROC, or they have a trade name registered with the Secretary of State, then they probably offer services to the public and could be classified as a contractor. Okay, not in all instances, but mostly if someone's in business for themselves, then they provide services to the marketplace, then they would be a contractor. So for example, any of you that are watching that have small businesses, if you were to hire our firm, we would be contractors to you. If you were to advertise that you wanted a bookkeeper, likely if that person came to work for you for 40 hours a week, they would be an employee. Okay. All right, any other questions? Okay, feel free to ask more as we go. The Department of Labor, there's a proposed rule that would make joint employers, so it's just a joint employer relationship, saying that the proposal would ensure that employees and joint employers clearly understand their responsibility to pay at least the federal minimum wage for all worked overtime and hours worked over 40 hours in a work week. So there's a 4-factor test to this. The test to consider whether a potential joint employer actually exists is if you, in a joint employer, I'm going to explain it like this. There's examples on the next slide, but pretend that we own 2 restaurants. We own one in Chandler and one in Phoenix. Okay. So in that instance, let's say I own them by myself. So let's say that do I have the authority to hire and fire employees? Yes, because they're my restaurants, right? Do I supervise and control the employees' work schedules and conditions of their employment? Yes, because I'm the boss. Like, I make the schedule and decide who's working what hours. Do I determine the employee's rate and method of pay? Yes. So I'm the one that says, hey, chef, waitress, hostess, sommelier, I'm going to hire you and pay you X amount of dollars every 2 weeks. Do I maintain the employee's employment records? Yes. Okay. So if I do that for my Chandler restaurant and my Phoenix restaurant, I am a joint employer. Okay. Because these things apply to me in both of my businesses. So here's an example. An individual works 30 hours per week as a cook at one restaurant establishment and 15 hours a week as a cook at a different restaurant establishment affiliated with the same nationwide franchise. So for example, we'll just say Subway's, because that's the one that comes to mind first. So if there's a Subway that's owned by someone in, let's say that Marcus owns a Subway in Chandler and Donna owns a Subway in Phoenix, okay? These establishments are locally owned and managed by different franchises that don't coordinate in any way with respect to the employee. Are they joint employers of the cook? So if Donna hires, someone to work at her Subway restaurant in Chandler, and Marcus hires someone to work at his restaurant in Phoenix, do they control that employer even though they're unrelated to each other? They don't. Doesn't matter. Okay. Number two example, if an individual works for 30 hours a week at one restaurant establishment, so let's say my restaurant in Chandler, and 15 hours a week as a cook at a different restaurant establishment owned by the same person, so say my restaurant in Phoenix, each week the restaurants coordinate and set the cook schedule of hours based by location. And the cook works interchangeably at both restaurants. The restaurants decide together to pay the cook the same hourly rate. Are they joint employers? So in this example, yes. The reason that they're joint employers is because of the control. So it's this part where they talk about coordinating and setting the cook's schedule, right? And they're owned by the same person. So in that example, that's what makes it the joint employer. So if you have multiple locations, for example, even if they're separate LLCs and they're controlled by the same people, then it's a joint employer, and you would have to pay overtime to people in this example because the cook worked 45 hours. 5 hours would be overtime. So someone asked a question, does the part-time employee get the same tax rate as a full-time employee? So if you mean federal income tax and state income tax withholding, then the answer is sort of, because an employee can, so tax rates are based on like a percentage of what you're going to earn for the whole year. So if you're working part-time, you will earn less money throughout the year, so you will have less withheld. So because instead of earning, a full-time employee might earn $100,000, but a part-time employee is going to earn $30,000. So you're going to expect that their income tax withholding will not be equal. They'll still be separate. However, Medicare, FICA, and Social Security have to be the same. So it's still 7.65%. State unemployment and federal unemployment are based on gross pay, which we'll talk about in a little bit, and that also will be the same. Okay. So CJ asked if a joint employer has to pay overtime to an employee, do they split that expense? So CJ, the way that this works, it's on a work week. So if in my example, let's say that they worked Monday, Tuesday, and Wednesday, 10 hours at my shop in Chandler, and then they went and worked 3 5-hour days at the store in Phoenix. The Phoenix hours would be the ones that would cause the overtime, okay? Because it's based on a work week. In that instance though, like there's no reason that there couldn't be an agreement between the locations to say that, hey, Phoenix, you're going to, or hey, Chandler, you're going to reimburse the Phoenix store for some of those payroll costs. Like that is fine. But just know that where that like 41st hour is incurred is the one that's going to have to pay the overtime. That's the employer that has to pay the overtime. Okay. For more information about this one, you can click on this link. It'll be in the slides that will be emailed out. So, okay. So far, so good. Clear as mud. I used to have a tax professor that would say that all the time. So, all right, let's talk about new hire paperwork. So when you hire an employee in Arizona, you are required to collect a W-4, an A-4, and an I-9. So let's talk about what those are. First, the W-4, it was changed recently. So this form that we've all seen, or maybe have all seen our entire lives, is now different. So there's a new form that started this year. And basically, employees can fill it out here. You can go look at the draft of the form if you want. It is online and it is available now. The new W-4 form is used for all employees hired after 2019. And it's for all employees that want to change their withholding. So there's just a new W-4 form. The W-4 form is what tells the employer how much federal withholding for income taxes an employee wants on every paycheck, okay? The A4 form is how much Arizona withholding an employee wants on every paycheck. And sadly, I just realized looking at this, you can tell how long I've been given this presentation. So it's the 2018 form, but it hasn't changed. All right, so each employee is required to submit a W-4 form to their employer. It's used to determine their withholding. It's used to claim if they're exempt from income tax withholding. Employees are allowed to submit a new W-4 form yearly by February 15th, but if they have a change of circumstance, they can complete a form at any time. We'll talk about that in a minute. An employee is also required to submit an A4 form. It's used to determine their Arizona withholding. It's used to claim exempt from Arizona income tax withholding, and they also can submit a new form by February 15th. Employees can make changes during the year by completing a new form. Employees changing their filing status, married, single, etc., should consider if they need to change their withholding. So sadly, I'm one of those people that I spend a lot of time thinking about income taxes. And there's been times in the past where friends have been, like they tell me that they're getting divorced. And the first thing I say to them is, I'm so sorry, you need to change your withholding. So because your filing status is determined at the end of the year and the tax rates are different and the withholding is different for someone that has been married throughout the year and then filing as a single person by the end of the year. So just keep this in mind. If you know an employee is going through some kind of change in their life, you can just say, hey, just so you're aware, you can change your withholding at any time, okay? And employees may need to make changes based on new income tax laws. So we had that new tax bill that was passed a couple years ago, and a lot of employees changed their withholding. Okay, the I-9. So this form, it's a 2-page form. It determines the eligibility of people to work legally in the US. The USCUS requires all employees and employers to complete the I-9 form. So everyone has to complete this form if they are an employee. You don't complete this form if people are contractors, okay? You don't complete any of these forms if someone is classified as a contractor. The I-9 form is completed by the employee and the employer. There's both parts. So when an employee does their part, gives it to an employer, and then the employer does their part, all right? It's very important that you do both parts. The employer retains the I-9 for 3 years after the date of hire or 1 year after the employment ends. Keep 2 files of people's I-9s. So most people have a folder and they write an employee's name on it and they stick all the paperwork in that folder. So while that is okay, the Department of Labor specifically says that you need to keep your I-9 forms separate from all of your other payroll forms. So then you should have an I-9 active employee folder and an I-9 inactive employee folder. And you put I-9s for all employees that are active in your active folder, and you put all employees that are inactive in your inactive folder. It doesn't matter why they're inactive, you just keep active in one spot, inactive in another spot. At a minimum, you have to complete sections 1 and 2 on the I-9 form. So section 1 is the employee portion where they say they have to check a box that says why they're eligible to work in the United States, okay? Section 2 is on the second page, and that's where you as the employer verify the documents that someone gives you that says they're eligible to work in the United States. It is not up to you to determine if those documents are forged. That's not a thing, okay? If they give you a form, you have to write down the information that they presented to you. Then you sign a little affidavit that said they presented that information to you, and then you write in their date of hire and you're done. You use the completed I-9 form to report people to E-Verify, which we'll talk about in a minute. All right, every time you hire an employee, you have to do new hire reporting. Here in Arizona, you have to do it in 2 places. So the first place is E-Verify. You can read all of this if you like, but these are the states that you're required to use E-Verify in. So E-Verify, basically you take your I-9 and you enter it into the E-Verify system, and it comes back and tells you an employee is eligible to work in the United States. If you are thinking about hiring employees, you need to go now and register as an employer on E-Verify. There's a quiz that you have to take, and you have to watch this little tutorial. It shouldn't take too long, half an hour, 45 minutes, but you have to register because you have 48 hours from when you hire someone to submit their paperwork through E-Verify, okay? E-Verify has been around for, 10 years now, at least. And all it is a way for you to verify documents, or you to tell the government that you attempted to verify documents that an employee gave you, okay? If their E-Verify comes back, so let's say it comes back and it says, this case can't be verified, there'll be instructions that you print out and give to the employee. So let me give you an example. I was doing E-Verify for a client once, and an employee, a young woman, she had just gotten married. So she came in and she filled out her I-9 and she wrote her first name plus her married name on her I-9. So when I entered it into E-Verify, that's what I did, and it came back and it said, this case can't be verified. There's a mismatch between the name and the Social Security number. So I printed out the form that I had to do and I gave it to the employee. Well, it turns out that when she got married, she never told the Social Security Administration that she wanted to change her name. So there's nothing wrong, she did nothing wrong. She just thought that when you got married, your name automatically changed. She didn't realize that you had to fill out paperwork and show your marriage license to the Social Security office, okay? So even if it can't be verified, there's no reason that you can't continue to hire an employee. You can't penalize them for what the results are from E-Verify. So you would never fire someone because they couldn't pass E-Verify, okay? There's paperwork that you have to give them, but it's not a fireable, like you wouldn't have to terminate their employment for any reason. All right, the second place that you have to report people is the Arizona New Hiring Reporting Center. So I copied and pasted the link for the banner here, or the picture, because this website looked really fake to me. So I just wanted to tell you that it's not fake. You can register with the Arizona New Hire system really efficiently and very easily. A lot of times payroll companies will report your Arizona New Hire, but they will not do the E-Verify, okay? Every payroll company is different. We'll talk about them later. But just know that if you're gonna hire somebody, you have 2 obligations, 3 if you count filling out all the paperwork with the I-9. So this is the new hire paperwork that I recommend. You're required to have the I-9. You're required to have the W-4. In Arizona, you're required to have the A-4. You need the E-Verify report in Arizona. So there's a report that says case is verified or whatever. You can just document the case number as well. And you need to verify that you were a report that you verified them as a new hire with Arizona. It's also suggested that you collect an application, emergency contact, and write an offer letter. So 3 things about the suggested 3 things. An application. So for example, if I put on my resume that I once was mayor of Tempe, right? Then that is not a fireable offense. Like it's a at-work state in Arizona, so you can fire me for any reason anyways. But if I put on the application that I was the mayor of Tempe and just flat out lied, then I could still be fired, and you wouldn't have to pay my unemployment. So you're in a stronger position as an employer when you terminate employment if employees lie on their application about their experience instead of lying on a resume. All right. Emergency contact is just nice to have in case of emergency, so you know who to call. And then an offer letter is nice because it documents how often somebody's going to be paid, what the pay period is, and what rate of pay they're going to get. All right, which is always best practice. So then everybody's on the same page and there's no question about what somebody thought they were going to be paid versus what they're getting paid. Okay, so far so good? Clear as mud? All right, record keeping. So in Arizona, at a minimum, there's 2 pages of this, and I know it's a bit of an eye chart, but we're going to talk about all of them. You're required to keep the new hire forms. So at least the 5 that are required. The Arizona Department of Economic Security, which is the one that regulates a lot of payroll in Arizona, you're required to keep check stubs or cancel checks for payments. So I'm going to stop here for a second and talk about direct deposit. So if you pay an employee by direct deposit, that is allowed. And it is something, there's a report that you would get of direct deposits that were initiated instead of check stubs or canceled check stubs. Okay, so you're fine paying somebody direct deposit. Check registers. So I don't know if you remember, like, I actually have one in the kitchen, but you remember when we used to have our checkbooks and we would flip them open and we would have the multi-line paper, you know, for the check registers, the paper ones. So I don't know anyone that still keeps one of those outside of my mother, but at the same time, those check registers are all usually electronic now, especially in QuickBooks. So your electronic check register, also totally fine. A payroll journal shows the gross to net pay calculation for every employee for that payroll, okay? So in our example at the very beginning, remember how the employee had $1,000 of gross pay, and then by the time we took all the deductions out, it was $910.50. You're required to keep that for every employee, okay? Payroll tax reports. There are 3 payroll tax reports that are due once a quarter, so that's 12. And then there's 3 annual payroll tax reports, so that's 15 reports a year. You have to keep copies of the W-2s and W-3s, which is one of the annual payroll tax reports. And for each payroll, you have to document the beginning and end dates of the payroll and the total amount that's paid for all services. So in my $1,000 example, we have to document how that employee came to earn that $1,000. Am I paying them $11 an hour? Are they salaried for $1,000? What's going on there, okay? The total amount that's paid for all their services, so how much we agreed to pay them, and the date in each week that the largest number of employees worked. So this sounds silly, but we're going to talk about why you need this later. So I'm just going to leave this here for now. So payroll beginning and end dates. When did the pay period start? When did the pay period end? How much we're going to pay an employee, and how many employees we had in that payroll. For each worker, each employee, you need to know their first and last name, their social security number, the date they were hired, rehired, or the date they returned to work, the date of their termination, their separation, and why. So did I fire them because they lied on their application? Did I fire them because they lied on their resume? Did I fire them because they didn't show up? Did they quit? Did they die? Did they move? Like any of those, whatever reason, it doesn't matter. The amount that they're paid each calendar quarter, the amount that they're paid each pay period, and any date and amount of any special payments, which would be like a bonus, and the place where the services were performed. So the reason that you need to know these, the first 2, first and last name and social security number, you can't file any of your payroll reports or W-2 without it, okay? And if you can't report to the IRS and the Department of Revenue that you paid an employee, then they might not let you deduct that as an expense for your business. The date of hire, rehire, or return to work, and the date of termination, separation, and the reason, those are required for employment law. So you're just required to know the dates that someone worked for you and why they left. The amount paid each calendar quarter and the amount paid each pay period and any amount date of special payments, all of those amounts are required for the payroll tax reports and also to prove that you did a good job as an employer with the Department of Labor rules about how much an employee is supposed to make. So minimum wage, for example. And the place where the services were performed, this goes back to like our joint employer, for example. Also, in some states, if you have, like, let's say I had my 2 restaurants again, one in Phoenix and one in Chandler, and I reported them together, there's a problem there. In some states, you have to have 2 separate state unemployment numbers because employees are working in 2 different locations. All right. In Arizona, it's not necessary, but in other states it is. Okay. Any questions? Doing good so far? Still with me? Okay, good. All right. So exempt versus non-exempt. So exempt is a fancy way of saying they're exempt from overtime or somebody is salaried. Non-exempt means they're not exempt from overtime and they're hourly. So an hourly employee or a non-exempt employee is paid hourly. They're paid 1.5 times the regular rate of pay for any time in excess of 40 hours in the payroll work week. However, it is up to you as the employer to determine the payroll work week. Most payroll work weeks run Monday to Sunday, right? So if an employee works 43 hours from Monday to Sunday, the 3 hours would be overtime. Don't do flex time. I'm advising you not to do a flex time. If an employee works 42 hours in 1 week and 38 hours in the second week, that is not the same as 80 hours in a biweekly pay period. The 2 hours are overtime. The Arizona minimum wage is currently $12. It will be $12.50 on January 1st. If they make commission, they still must meet the minimum wage requirement. So for example, if you have an employee that's a salesperson and they're paid entirely on commission and they spend 40 hours a week hustling for work and they sell nothing, you still have to pay them minimum wage in Arizona, okay? Exempt employees. So exempt employees are exempt from minimum wage and exempt from overtime. It is a predetermined fixed salary, not based on the quality or quantity of work. That part's important. It's not based on the quality or quantity of work. So if an employee comes to work and they're salaried and they only stay for half days for the whole week, you still have to pay them their salaried amount, okay? Unless you make them sign something that says they understand that their pays, like, you know, that you're changing their rate of pay because they're not coming to work, okay? There's also a duties test. So for example, in order to be a salaried employee, an exempt employee, you have to be an executive, an administrative person, a professional person, outside salespeople, or certain computer employees. What you don't see on here are a lot of like blue collar jobs. So for example, you can't have a mechanic that is salaried, okay? However, you know, the guy that like I don't know what they're called, but you know, the people that like tell you all the things that are wrong with your car and then all the options that you have to pay to fix it, like that guy that stands behind the computer terminal, that guy could be salaried, okay? The salary currently is $455 a week. So an employee that is exempt, that is salaried, has to make at least $23,660. And that is a federal rule. There was a proposed rule that was supposed to take effect in December of 2016 that would have raised that this limit here, this $23,000 limit, it would have raised the limit to $47,000. This was enjoined in federal court, but on March 19th, the Wage and Hour Division of the Department of Labor said that they projected to increase it to $679 a week, which would be $35,000 a year. More info, you can go here and click on the link and I'll talk all about the Department of Labor, the overtime rules and exempt and non-exempt. And CJ asked what outside sales means. So CJ, it's usually like a hunter salesperson, for example. So they're going like door to door almost, or like cold calling. So those would be outside sales. There's a whole description of lists. If you go to this Department of Labor website, there's a whole list about who qualifies and who doesn't. I did list just the tests, the duties tests here. So these are certain duties, but there are also certain classification of employees that are never allowed to be salaried, like mechanics, for example. They're never allowed to be salaried unless they manage other employees, and then they fall in the executive category, okay? All right, Prop 206. So I don't know if you remember this, but Prop 206 was passed by voters, and the minimum wage in 2017 increased to $10 an hour. It's currently $12, and it'll increase year after year, and then for cost of living. It includes sick paid leave, and it was unsuccessfully challenged in court. So this is the new rules for us in Arizona. So there's two sets of rules. First, for employers with 15 or more employees, and then employers with 15 or fewer employees. So remember earlier when I said that it was important to note how many employees you had, the most employees you had per week? This is why. An employer has 15 or more employees if it maintained 15 or more employees on the payroll for some portion of a day in each of the 20 different calendar weeks, and the weeks don't have to be consecutive, in the current or preceding year. So that's literally the way the law was worded, and I don't know about you, but that is not clear to me. Like, so I don't know, it's very strange. So it's 20 weeks either this year or last year, and the weeks don't have to be consecutive, and we get to decide kind of which weeks we're going to look at and things like that. So my advice to you would be to err on the side of caution, and because if an employee were to complain, it will cost you more time and money to fight the complaint than it would to just give them the sick leave. So two other quick things about this sick leave. The labor law, there's a labor law poster requirement. So you have to hang a poster, like you can just print it out from your computer, and you have to hang it in your place of employment where employees can see it. The amount that an employee has available, the amount that they've taken, and the time that they are going to receive has to be on their pay stub. So you have to tell them how much sick leave they have. All right, so this is why there's two different sets of rules, one for 15 or fewer, 15 or more employees, and 15 or fewer. So you accrue 1 hour for every 30 hours worked. So that's the same. So basically every hour an employee works, they get 2 minutes of paid sick leave. So the difference is how much they accrue. So here, if you have 15 employees or more, they can accrue 40 hours a year. If you have 15 or fewer than 15, so no more than 14, it's 24 hours a year. The employers can select a higher limit. The employers can elect a 90-day waiting period, and all the balances roll forward but they don't have to be paid out when an employee leaves. So in this example, like my employees, because it's expected in my industry, they earn 2 weeks of paid vacation. So my plan is more generous than Prop 206. So my plan lets them have 80 hours every year. So in that instance, Prop 206 doesn't apply to me because my plan is more generous. That makes sense? So this can be set up in QuickBooks too. If you're using QuickBooks to do your payroll, they can set that up. And then all payroll companies can track this as well. All right, the Affordable Care Act. So the Affordable Care Act has not been repealed, and it is still effective and enforceable by law. And we recommend that you comply with the Affordable Care Act in its entirety. The individual mandate penalty was repealed in 2019. So now if you don't have insurance, you wouldn't pay the $695. But if you have 51 or more employees, you have to offer group health coverage still, okay? All right, any questions? We're gonna talk about workers' comp. This is so exciting. All right, so under Arizona law, it's mandatory for employers to secure workers' compensation insurance for their employees. Workers' compensation is a no-fault system in which an injured employee is entitled to receive benefits for an industrial injury, no matter who caused the accident. You can obtain workers' compensation insurance from any Arizona company licensed to issue workers' comp policies in Arizona. Employers are required to carry coverage regardless of the number of workers they have, part-time, full-time, minors, aliens, or family members. It's not required for independent contractors, provided that that contractor has their own coverage. Okay, so let's talk about a few things here. Do you know those guys that stand in the car wash and they tell you that they can fix that rock chip in your window? So the stuff that they use to fix the rock chip, the little stuff that they squirt in there, it's called resin and it's flammable. So I had a client that did that, provided that service in Texas. And one day, one of his employees thought he would show off for a girl and squirted that stuff all over his hand and lit it on fire. So guess what? My client got a workers' comp claim because it's no fault coverage. Like, it doesn't matter that the employee lit his hand on fire. Like, the insurance company didn't care and they still had to pay out the claim to fix his hand. So keep that in mind. All right, the other thing I want to talk about, when you go to buy workers' comp insurance, there's certain kind of proprietary insurance companies. And I just mean proprietary in that they can only sell those types of policies. So for example, if you went to a State Farm agent, State Farm can only sell you State Farm insurance, right? But if you go to a broker can shop insurance across all lines of service. So they can check costs from CNA or Hartford or Travelers or, you know, whoever else. So if you go to a broker, you're likely going to get, and I've been doing this for 20 years, you're going to get a better workers' comp rate than you would with State Farm, Farmers, and American Family. The State Farm, Farmers, and American Family, like, you should, if you have an agent that you work with and you love them, you should absolutely have them quote it for you. But just know that they kind of specialize more in personal lines of service than in business lines of service. So ask a broker as well. The part about the independent contractors. So remember we were talking at the beginning about what's an employee and what's a contractor. So if let's say that I'm a sole proprietor and I own an accounting firm, and CJ, since I remember your name, you'll be my guinea pig today. So let's say CJ decides to hire me as a bookkeeper, right? So if I don't have my own workers' comp policy, then CJ's workers' comp policy would be required to cover me, right? Because there's a chance that I could come into CJ's office and like go to the paper slicer machine and cut my finger off, right? In that example, however, if you own your own business and you don't have employees, you're allowed to waive the workers' comp requirement. So I don't have to pay workers' compensation on myself because I own my own company. I don't have to pay workers' comp. So I currently have 8 employees. So I have a workers' comp policy, but my policy excludes me. So I'm not covered by my own workers' compensation policy. If you're the sole employee and owner of a business, you can not have a workers' comp policy, but people that hire you would then have to cover you unless you signed a waiver. So if you hire contractors, you should collect their proof of insurance, their workers' comp, and if they don't have one, ask your insurance agent or broker that sold you the workers' comp policy what form they have, because you can have that person, excuse me, you can have that contractor fill out that form and then you don't have to pay workers' comp on their contractor payments. Does that make sense? Okay. If it didn't, somebody just type no in the question and answer and I'll go over it again. Okay. So this is how workers' comp works. You estimate the total payroll cost for the year. So at the start of the year, I have 8 employees. I know how much my employees are going to make because they're all salaried because I don't want to track payroll hours. And they're in that administrative classification or professional classification. So I know exactly how much my employees are going to make for the year. I told my insurance company, I don't have any independent contractors that don't have their own workers' comp coverage. Like I have a computer guy, a company that does my IT services, but they're actually a client of mine, and I know that they have workers' comp, and I have a certificate from them. I describe the industry and what job duties the employees do. So I tell my insurance company, you know, like this accountant only ever works from home. This accountant goes to clients' offices and only ever works from clients' offices. This accountant happens to, you know, work at a open pit mine, right? You pay your premiums throughout the year based on the workers' comp rate of so much per $100. So it's just a percent is how that works out. There's experience modifiers, which are previous accidents. That's a fancy way of saying how many accidents have you had. So when I was telling you the story about the guy that lit his hand on fire, that became an experience modifier in the next policy cycle. There's industry modifiers. So think about dangerous things. So like my workers' comp coverage is roughly 0.8 cents. So not even a whole penny per $100. So my entire policy costs like $200 a year. However, if you're in the restaurant industry, that's not going to be the same rate. Like you're going to pay more money. And then, for example, like if you, let's say you did construction, like, you know, ran those big, huge, like earth movers and dirt movers, like those things, those are more dangerous industries. So especially from accounting, like what am I going to do? Get a paper cut and gangrene or something? So then there's surcharges, fees, minimum premiums, monthly fees, and statement fees. The only thing on this list that you really actually have control of is number 4. So the other 3 are usually comparable amongst carriers. So you want to watch the experience modifiers though, because if you educate your employees about how to be safe on the job and you're diligent about practicing safety, then you won't have those experience modifiers that will make your premiums go up. Those experience modifiers will follow you from insurance carrier to carrier to carrier as well, because they will ask for what's called a loss run if you want to change your policy. Anyways, so because you base your payroll, you tell them your total payroll cost for a year. So let's say we were going to go buy one today. We would say, okay, we're going to hire employees in November 1st. So our policy year would run from November 1st through October 31st of 2021. At the end of October, so in November of 2021, we would receive an audit. So if you estimated your payroll to be $100,000 and it was actually only $75,000, you get a refund. If you estimated your payroll to be $100,000 and it was $150,000 for the year, you get a bill. And in that instance, the carrier will adjust your new payroll estimate to be the prior period audit amount. Consider, if you're a growing company, reporting that the growing payroll to the carrier during the year, or save your money for the bill. So this is something that I want to talk to you about in the COVID times. All right. So I work a lot with bars and restaurants. And as you can imagine, there was a lot of layoffs for most of my clients in bars and restaurants. However, at the start of the year, let's say we estimated the payroll was going to be $350,000, and now we think the payroll is going to be $200,000. I can go back to my insurance carrier in the middle of the plan year and revise my estimate down. If I revise my estimate down, it will lower my monthly premiums, okay? So if you currently have experienced layoffs or had to lay off employees because of COVID, get a hold of your insurance agent and reduce your payroll premiums or your payroll estimates to make your premium payments go down, okay? When you get the audit as well, fill it out as soon as possible, because then you could get that refund or apply that refund to your next plan year, all right? So just a note about that. It's just a way to save a little bit of money every month if you experience any reduction in headcount because of COVID. Okay, calculating payroll. Questions so far? Okay. All right, so each employee must have FICA. Remember my FICA? Well, who's this FICA taking my money out of my check? They must have FICA, Social Security and Medicare deducted from their gross pay. Depending on their W-4 and their A-4, the employee will likely, but not always, have federal and state withholding. These deductions are part of the gross pay that the employer holds and remits on behalf of employees. So we're going to talk about that. So let's say we have two employees. One of them is on the first employee as single, claiming 0 on their W-4. The second employee is married and claiming 3. We pay each of our employees $1,000. But look at the difference in their net pay. Employee number 1 gets $883 and employee number 2 gets $910. The difference is the amount of federal and state withholding. So employee number 1 had $40 deducted, while employee number 2 only had $13 deducted. So this doesn't mean that your employees made the same, right? And it's your responsibility in the change from this $1,000 to the $883 and this $1,000 to the $910. That's not extra money that you get to keep. That's money that you have to pay to the IRS or Department of Revenue. Okay, so employees' gross pay was the same, but their net pay was different because of the employee's choice to withhold more or less for federal and state income taxes. Social Security and Medicare were the same because they're based on gross pay. So here, it's still $62 for both of them and $1,450 for both of them. Payroll expense for this company is $2,000, not $1,794. The employer is responsible for the payroll taxes, so for the FICA match and the unemployment. The company is responsible for paying the employee withholdings and the payroll taxes to the IRS, the Arizona Department of Revenue, and the Department of Economic Security. For most employers, this payroll tax deposits, your payroll tax deposits are due by the 15th of the month for the prior month. So any payroll that you have in October, your payroll taxes are due November 15th. The IRS tells employers the frequency which to deposit the money. Everybody defaults to monthly. In some instances, you will have to pay with each payroll, but the IRS will tell you. The state follows the federal frequency. So if the IRS says you're a monthly depositor, you're a monthly depositor for Arizona. If the IRS says you are a biweekly depositor, you're a biweekly depositor with Arizona. The state unemployment and federal unemployment are due quarterly. Okay. So there's four types of payroll taxes. So Social Security is 6.2% of gross pay. Medicare is 1.45% of gross pay. Federal unemployment is 0.8% of gross pay, up to $7,000 annually. And Arizona state unemployment is 2.3% of gross pay, up to $7,000 annually. So the Social Security amount, this $118,500, it changes annually. There's additional rules that apply if gross pay is more than $250,000 annually. There's an additional Medicare tax. So if you have an employee that makes more than $250,000, you might have to pay in more Medicare for them. Federal unemployment and state unemployment. There's a default rate in Arizona for state unemployment of 2.3%. I suspect that because of all of the people collecting unemployment in 2020, that default rate in 2021 will be different. So just a little, an extra asterisk besides the 3 that I already put on there. So the other thing is that payroll, if you notice these federal unemployment and state unemployment in Arizona, it's only up to $7,000. So if you have an employee that you agree, like I hired someone to basically like be a general manager, CFO for the company, and I pay him $100,000 a year. I only pay unemployment on him until about March, and then it's done because he's hit his $7,000 limit, and I don't have to pay anything else for him. All right. I have employees in Oregon. Their state unemployment limit is $33,000 annually. Okay. So if I had an employee in Oregon, or my employees in Oregon, if they made $100,000, then I would be paying their unemployment through like May. In our example, gross pay was $1,000 for 2 employees, or $2,000. Payroll taxes are 6.2%. Social Security is 6.2%, or I can read, 6.2 times $2,000, or $124. Medicare is 1.45 times $2,000, or $29. Federal unemployment is 0.08 times $2,000, or $16. State unemployment is $46. So total payroll taxes for this payroll in this example is $218. So the total cost, when it's all said and done, if this was the only payroll transaction we had for this year, we would actually send out cash into the world of $2,218. Okay. The $218 would be the payroll tax portion. Okay, so employee withholdings or payroll taxes, even though they're called payroll taxes, even though they're not actually the payroll tax part. So the payroll tax part is just the match portion, the $218, okay? Payroll taxes for federal unemployment and state unemployment end at $7,000 annually in Arizona. A full-time year-round employee will hit the wage-based limit sometime in April or May, and payroll costs will always be higher in the first half of the year than in the last half of the year. If you have high turnover, you will pay more unemployment because the $7,000 annual wage base is per employee. So let's say that you have a receptionist position, right? You just need someone to answer the phones at your office. And let's say you hire someone in December and they're working for you, and the year changes over and they're working for you in January and February and March and April. And at the end of May, they leave and you hire someone else in June to take their place. Your state unemployment for that new employee starts over again because it's based on $7,000 a year per employee, okay? If you hire a brand new employee in December, you would pay all of the unemployment on their wages in December, even if they had a job with somebody else and already paid into the system, okay? It's always $7,000 annually on a calendar year per employee. As a rule of thumb, in a service-based business, for each dollar you pay in payroll, there's 10 cents in payroll taxes and workers' comp. But it's averaged out through the year. So what we were just talking about is those $7,000 limits, usually if you don't have a lot of turnover, are going to happen in the front half of the year, but then fall off. And then you'll just have workers' comp and payroll taxes for the last half of the year. Restaurants and manufacturing companies will have higher workers' comp premiums. Okay, make sense? Any questions? Okay, working with a payroll company. So I hope the unintended consequence, or maybe my intended consequence, I think I should say, of this presentation is to give you an idea that payroll and payroll taxes are scary. So it's not something to be messed with. And I feel like personally, I feel like hiring a payroll company, if you have employees, is the best thing for you. So I personally, I use Intuit's system and have a payroll subscription with Intuit. They give it to us accountants for free, but I actually really don't like doing payroll. Like I would rather have a payroll company just do all of it for me. But it's that old saying about shoemaker's kids that go unshod. Like every time I have to do my own accounting, I'm like, oh, this sucks. Who can I hire to do this? So this is something like I think payroll companies are well worth the money. So I want to tell you a little bit about what I've learned working with them for the last 20 years. So you hire a payroll company to calculate your payroll, to pay your payroll tax deposits. Remember I said payroll's in October. You have to pay the payroll taxes by November 15th. And then they file all the payroll tax returns. So for example, third quarter ended September 30th. So all the payroll returns for the quarter, all 3 of them, are due October 31st. So if there's a tax payment that's missed, the payroll company usually will pick up the penalties and interest, but you still have to pay the tax. So let's say back in our $218 example, let's say your payroll company, for whatever reason, just forgot to make the payment, or who knows, things happen. So let's say they forgot to make the payment, and then you get a bill that says, hey, you owed us $218 in payroll taxes and you didn't pay it. Now you owe us $10 in interest and or $10 in penalties and $1 in tax. You would have to pay the $218, but your payroll company will pay the tax and interest. If you get a notice in the mail regarding your payroll, all you do is scan it and email it to your payroll company, and they take care of the notice. That's it. Sometimes you have to follow up to make sure they took care of the notice, but we'll talk about those in a minute. All right, so working with the payroll company, usually the fees are based on the frequency and the number of employees. So the more often you pay payroll, the more expensive it's going to be, but only because you have payroll more times. So for example, if you have a weekly payroll, the payroll company might have a flat rate of $10 a week. If you pay a biweekly payroll, so every 2 weeks, the payroll company might have a flat rate of $18 a week. So you see what I mean? So while you would pay $36 a month for a biweekly payroll, you might pay $40 a month for a weekly payroll. Usually there's some kind of base fee plus a per employee fee. In my experience, you should pay no more than $3 an employee per payroll, okay? Some companies have one person that's assigned to you, and some companies have 800 numbers that you call. They all have add-on services. So they have HR services and employee handbook services and paid time off accrual services, and they have employee assistance programs and retirement plans like 401ks and simples. They have workers' comp, pay-as-you-go plans. They all have add-on services. Their job is to get you to buy those add-on services. So payroll is just a way for them to get you to buy their other products. So just know that. I'm kind of making it sound like payroll companies are just kind of shady, but they provide a very valuable service. But if you're savvy enough, you can get most of those other things for less cost than what it would cost to do it with the payroll company. The payroll companies are selling you convenience. So like the workers' comp services that they have, there's ones that are pay as you go. So each time you run a payroll, you pay your workers' comp. But remember how we were talking about there's an audit at the end of the year, and then you would owe money or get a refund? So that goes away. So if you're nervous about owing money or getting a refund, then go with a pay-as-you-go service through your payroll company. However, for example, there was a national payroll company that everybody on this call has probably heard of that would offer these pay-as-you-go services, and they would charge $7 a payroll. So if clients signed up with them and they were on a weekly payroll, it would cost them like hundreds of dollars more just to have this peace of mind that they're not going to owe money on their workers' comp policy at the end of the year. So to me, that $7, it's not worth it. So like, I don't want clients to have to pay that. So I just think it's not, I don't know. So I don't like it, but the biggest thing that I can tell you is that you just need to pick the company that makes you most comfortable. So every payroll company is going to have problems, and regardless of how prepared you are and how you do it, something's going to go wrong. Payroll's complicated, so at some point something will go wrong. So just be prepared for that. So pick the company where you can call or send an email and you get to someone that you feel like is competent and knows what they're talking about, or that someone calls you back when you ask a question. That's what you're looking for, that level of service that they're going to follow up, because there is going to be a problem at some point, right? So to give you an example, in January, I told you that I have employees in Oregon. I have employees in Oregon and Arizona. And in Oregon, they have different types of tax like we do, but they have a few more because they don't have sales tax for employees. And when I went to make my payroll tax deposit, I sent my money to the wrong agency by mistake, right? It just happens. So then I get all these notices in the mail. So if I had a payroll company, I would just send all those notices to the payroll company and they would go get agency A to give the money to agency B, and then everything would be fine. But I had to do it myself. So, all right, so how payroll companies work. So first, you report gross pay by employee in a manner of your choosing. So you can go online and fill it out. You can send an email. You can do it old school and fax it, however you want. There's apps that you can do it with. There's a million different ways to report your payroll. Payroll's calculated where the employee withholding for their federal and state A4, W4 comes out, and then their FICA, Medicare, and Social Security come out. And then checks or direct deposits and pay stubs are given to your employees. So these can be actual physical checks. They can be checks that you write. They can be direct deposits where the pay stub is emailed to your employee. There can be portals where your employees go on, log on, and get their own pay stubs. There's a million different ways that these happen now. Usually the payroll company will deduct the employee's net pay the day before the paycheck date. And then on the paycheck date, the payroll company will make deductions for all the payroll tax deposits, the withholding plus the payroll taxes. So I'm going to go back for a minute. So just close your eyes when I make you seasick. All right. So in this example, remember we talked about this example where we have two employees that we're going to pay $1,000. So if we used a payroll company for this, and let's say our paycheck date was Friday. So today, the payroll company would take $794 out of my bank account, right? Which is the $883 plus the $910. Tomorrow, they're going to take $436 out of my bank account. The $436 are these withholdings from employee A, or oops, these withholdings from the first employee, and these withholdings from the second employee, plus my payroll taxes. This $124, this $29, this $16, this $46. So this $218, they're going to take the $218, which is the payroll tax amount, plus what the employees have withheld, which was another $218, roughly. So that's what's going to happen to me. Now, remember when we were on, oops, I went the wrong way. So remember that some of those payroll taxes aren't due except quarterly, but that's how payroll companies also make their money, is because they'll take the payroll tax deposit from you today, even though they're not going to give it to the IRS or the Department of Revenue until November 15th and like January 31st, when fourth quarter payroll tax reports are due. So just know that, okay? Other tips: make your pay period end on a day that makes sense to you. Sunday is a very common day to make for payroll taxes for work weeks to end and your pay period to end. Leave yourself time to calculate the hours to get to gross pay and report the payroll. Make your paycheck date 4 or 5 days after the end of the pay period. So in Arizona, employers must pay their employees at least twice a month, no more than 16 days apart, and within 5 working days of the end of the pay period. So I personally, as I may have alluded, do not really like payroll. But what I do is I pay my employees on the 5th and the 20th. So the paycheck on the 5th are for any hours or any pay that they've earned from the 16th of the month through the end of the month. And then I pay them 5 days later. And then any hours that they work from the 1st of the month through the 15th of the month, they get paid on the 20th. If the 20th and the 5th happen to fall on a Saturday or Sunday, I pay them the Friday before. So most biweekly payrolls your pay period starts on a Monday, it ends a week from the following Sunday, and you get paychecks on Friday. Most payroll companies need time from when you report the hours to them for them to process the payroll. That lead time has gone down. It used to be that you would have to process by noon on Wednesday. If you wanted paychecks on Friday, you would have to give them almost 1.5 days, but now they can do it almost overnight. So every payroll company is a little bit different though, so you're going to want to check with them about that. Recording payroll. So when you put payroll into your books, you're going to put it in on the paycheck date, not on the day that they take the money out of your bank account. So for example, if you, let's say that your paychecks are every other Friday and October 31st happens, let's just pretend it's a Thursday. I don't even know what day it is this year, but let's say that October 31st is a Thursday and November 1st is a Friday. You're going to want to put all of those payrolls in your books on November 1st. And even though the payroll company would take payroll out of your bank account on October 31st. Okay, forms and due dates. So the Form 941, it reconciles the payroll tax deposits with the gross pay that was calculated and owed. It includes federal withholding and Social Security and Medicare. It's due by the last day of the month following the end of the quarter. So the quarter ended September 30th. So Form 941 is due to the IRS by October 31st. The Arizona QRT reconciles the state withholding tax deposits with the gross pay and the actual withholding. This report is due on the last day of the month following the end of the quarter. So again, October 31st. The UC-08 reports gross pay by employee and calculates the amount of state unemployment tax due. So remember how we were talking about turnover and the $7,000 limit in Arizona? So because the gross pay is reported by employee, then that's why the limit is paid, restarts as you hire new employees throughout the year. This report is also due by the last day of the month following the end of the quarter. Your W-2s and W-3s report the gross pay, the Social Security, the Medicare, and other items for employees. The W-3 is just a summary report of all the W-2s. It's due January 31st for the prior calendar year. These reports are, payroll companies prepare all these reports for you. One other thing about payroll companies, so people always ask me like if I have a favorite. I don't. So it kind of just depends on what you need. So ADP and Paychex are probably the biggest ones that are out there right now. Both of them have great things. They do great things. ADP has some really cool features. So they're very big in the technology part. Paychex has some of those features that are a little bit more watered down, but then not as expensive. Both of them, whatever price they give you, like you could say, no, I only want to pay this much. And remember, it should be roughly about $3 an employee per payroll, okay? So then there's some local companies that that do a good job here in Arizona. There's one called Journey Payroll. There's another one, it was called IOI Pay, but then that was crazy because that company, the owner actually embezzled a bunch of money and stole a bunch of money out of IOI, but they were purchased by Prime Pay, but they're actually an outfit down in Tucson. Journey Payroll's here in Phoenix. Then there's like online only ones like Gusto and Zenefits. With Gusto and Zenefits, for example, though, you're very rarely ever going to get to talk to a human being. So if you're very big on personal relationships, I think my dog's gonna bark, but if you're very big on personal relationships, then you're not gonna wanna pick a Gusto or a Zenefits because everything is based, like it's chat based. You just start a chat or you send a help ticket. So just keep that in mind. But a lot of companies now, because of COVID, are running specials where you get a year worth of payroll for free, or you can get an employee handbook for free. So ask them about specials that they're offering. My contact information is at the end of the slides too. So if you feel like you're not getting a price that it seems affordable, just let me know. Send me an email and tell me the price that you were quoted, and I'll see if I can get you something better. Okay. All right. Form 1099 miscellaneous. So remember we were talking about employees versus contractors. So this information, while the general gist of this information is the same, the form has changed for 2021. Okay. So when we file these forms in January, we will file a different form than what I'm going to show you in these slides. All right. But this form, there's just the IRS had a disclaimer on the website that if you go and look up Form 1099 miscellaneous, it says you can't use a printed copy of this form from the IRS's website to file. So you can't go irs.gov, print out a 1099 miscellaneous form, fill it out and mail it to the IRS. They will mail it back to you. So you have to file electronically, or you have to file on a certain size paper, which you can buy at any office supply store this time of year. Okay. All right. So types of payments that you have to report. This part has not changed. So these are still the reportable payments. On a 1099 miscellaneous form, you're going to file for any amount of money that you gave someone over $10 for royalties, at least $600 in rent or services that was performed by someone that was not your employee, any other income payments, and payments to attorney. And there's a few other less common items. So let's talk about each one of these. I have clients that do royalties. So they're record labels and film distributors. So an artist will come to them with their CD. They'll print out a bunch of CDs and put it on iTunes and all this stuff. And then we send them a royalty check twice a year. If I pay any of those songs or any of those artists more than $10, we have to file a 1099 form for them. Okay. Rent. So I rented an office space from someone. And then when our lease expired, I didn't renew it because we were all working from home for COVID times. So I would file a 1099 for my landlord for January through June when I rented my office. If you write someone a check for rent, you need to file a 1099 for them. I'm going to skip the services for a second, but payments to an attorney. So let's say you hired an attorney to form your LLC for you, or you hired an attorney to review your lease agreement, or to write a non-disclosure or a non-compete agreement for an employee that you decide to hire. Any of payments to an attorney over $600 are also reportable on the 1099. The part that changed from the 1099 miscellaneous form to this 1099 NEC form, NEC, is the services performed by someone that was not your employee. So it used to be called non-employee compensation. So on the form, it was this box 7 in the middle, non-employee compensation. So let's say your business hired my accounting firm to help with your accounting work. So 1, that's services. 2, I'm not an employee. So you would normally report in box 7 how much money your business gave to my business, right? However, there's one kind of caveat. There's some exceptions. The most common exceptions are that payments made to a corporation, including a limited liability company that's treated as a C Corp or as an S Corp, you don't have to report, except attorneys. So, you know how there's like all those lawyer jokes, right? And the IRS, for whatever reason, like they're saying that even if your lawyer is a C Corp or an S Corp, you still have to report payments in excess of $600 to them, okay? My business, personally, I am an S Corp. So even though I provided services to your business and I'm not an employee, because I'm an S Corp, you don't send me a 1099. You exclude payments for merchandise. So let's say that you own a landscape company and you go out and you buy a bunch of shirts and have your logos put on them. It doesn't count because you bought stuff. Payments to rent, payments of rent to real estate agents are not reportable. And then there's other specific exclusions. But if you pay for services or rent or an attorney, you need to collect a W-9 from those people, okay, or businesses. If you buy stuff, there is likely no need to collect a W-9, okay? So the forms, it's a 5-part form. There's a copy A, which is the red part. So this is what the copy A looks like. Then there's a copy 1, which is for the Department of Revenue. There's a copy B that's for the recipient, so whoever you paid the money to. There's a copy 2, which is the state copy for the recipient. And then there's a copy C, which is for you. Then there's a form 1096 that's a transmittal form that just basically says, hey, IRS, I'm sending you 10 forms that have $8,500 on them. You use the information that's on a Form W-9 to fill out the 1099s. So what's a W-9? Hopefully you've seen this form before, but it basically asks for name, address, tax ID number, and then there's a bunch of boxes that people check. And if they check the box that they are a C Corp or an S Corp or an LLC that files as a C Corp or S Corp, then you don't have to do anything. If they check the box that they're a sole proprietor or an LLC that's a sole proprietor or a partnership, then you have to do something, right? And if you pay them more than $600, then you have to file a 1099 form for them. So there are penalties for failure to file 1099s. And there's actually a question on every tax return now that's related to businesses that says, has the business or will the business file forms 1099? So you have to check yes or no. And if you check yes, but didn't do it, or you check yes and have no intention of doing it, then that's considered fraud. So just be careful there. This is easy enough to do. And when you file these forms, like, it's the best course. And this is something that I tell all my clients, is the best course of action you can do is when somebody hands you a bill. So if you hired my firm to do accounting, for example, and we hand you our bill, you should say, hey, great, thanks for your invoice. Send me a W-9, because you know I'm providing services to your business. If you hire a lawyer and the lawyer sends you a bill, say, great, send me your W-9. Most lawyers will collect retainers up front. So when they say, hey, here's, the invoice for my $2,000 retainer, say, great, send me your W-9. So most companies it's a very common practice to send W-9s. Like, it's just a given. It's part of, being a business. So someone asked if our business does this on behalf of our clients. And yes, we can file 1099s on behalf of clients. So the due date for the IRS, the copy A form, they're due by January 31st. The copy B is also due by January 31st. But if you're filing it electronically, then you can file your copy Bs. You can file your copy A's February 28th. Okay, any questions about those? The change that the IRS made is that any payments that go in box 7, non-employee compensation, is now going on its own separate form called the 1099 NEC. So this one, right? This one is the miscellaneous income form, or down here in the corner in the bottom left, it says 1099 MISC. The other ones will say non-employee compensation instead of miscellaneous income. And down here, they'll say 1099 NEC, but it's the same information. Up here in the top left, we'll go your username, your business name and address, your tax ID number, then their tax ID number and their name and address, okay? One other quick thing, the IRS every year in April and then again in October, they send out notices that say, hey, you reported an informational return. So 1099s are considered informational returns, and the name and the ID number don't match. So in that instance, there's instructions on the letter that will come, but just know that that form comes out every year. And if you have someone listed on that form that is someone that you're still paying, then you're going to want to collect a new W-9 form from them. That's all it means. It just means that you could have made a typo in their tax ID number or in their name. Remember how I was telling you about that woman that worked for my employee that got married? So it could be something as easy as that, where someone like typed their name wrong, or when you entered it into the computer, you transposed 2 digits in their ID number. So it's not a big deal. Just collect new W-9s from if you get one of those notices. Okay, PPPs. So some of you maybe have gotten paycheck protection loans. So I just want to spend a couple of quick minutes talking about this. There's an FAQ. Oh, sorry, this is an old update. So it gets updated like every week in this moment. But this is the link to where you can find the current FAQs from the SBA. There are some notable ones that talk about you would exclude any compensation in excess of $100,000. It excludes payments from independent contractors. It excludes FICA, Medicare and Social Security. Payroll costs includes all cash compensation, which would then include bonuses. So bonuses are specifically identified now in the PPP. And the forgiveness is not reduced if a borrower laid off an employee or offered to rehire the employee, but the employee declined. But you need to have written proof of those offers. There was some confusion about current economic uncertainty when that request on the initial applications. So that current economic uncertainty automatically applies to any loan under $2 million, okay? When you're tracking your PPP, eligible payroll costs include payments made to US residents, salary, wages, commissions, other cash compensation, which include tips and PTO. Employee benefits, you can include their healthcare premiums and their retirement. And then you include state and local taxes. In Arizona, the only state tax you can include is SUI, the SUTA, the state unemployment, the 2.3% for the first-time employers. For independent contractors and sole proprietors, wages, commissions, income, or net earnings from self-employment are included, okay? Non-eligible payroll costs or mortgage interest on real property incurred before February 15th. So if you had a mortgage on a building that you bought before February 15th, you can include the interest. Business rent or lease payments for real or personal property. So this could include your copier lease, or if you're in the bar and restaurant business, your ice makers and dishwashers. It can also just include the lease on your space. Business payments for the distribution of electricity, gas, water, transportation, telephone, and internet. So all of those, again, like utilities, yes, it can mean gas, like for an automobile in certain instances. However, the thing I want to caution you on is since they extended the covered period to 24 weeks now, try to apply only on payroll, okay? Use the eligible non-payroll costs if you can't get there with payroll, all right? Of all my clients, everybody's going to get there with payroll. There isn't a single one that's going to have to include rent or utilities or mortgage interest. You're going to exclude compensation of any amount over $100,000. You're going to exclude payments to independent contractors. And in my opinion, gas and fuel is not the intent of the transportation utility. How you track the data, just build yourself a spreadsheet. So here's an example of a spreadsheet that I built for my clients. The date that you paid something, the check number, who it was for, did you save a copy of the backup? What was our head count? What's our gross pay? All of these things. This is how I did it for my clients. So build yourself a spreadsheet, track your rent payments and your utility payments, and keep copies of all the documents that you put on your paycheck protection loan. So keep a copy of your payroll register, keep a copy of your payroll tax reports. So one of my clients received a PPP loan for $1.7 million, and which is a lot, but they're a big restaurant group. So when they got the loan, every time we ran a payroll, and they run a payroll every week, every time we ran a payroll, we saved the payroll journal and we saved the payroll tax payments that were made. And so when I applied for forgiveness for them just last weekend, or weekend before, there was a part in the application in the bank's online portal well, I had to upload all those documents. But because I had planned ahead, all of those documents were already sitting and waiting for me to just upload. So keep track of that kind of stuff. If you haven't done it now to this point, go back and do it. Start pulling all that information to add up to your payroll costs or to your PPP loan amount. In QuickBooks Online, the report you want to use is right here. You go reports, payroll summary by employee, and then it's the total gross pay. And then you can use reports, payroll summary by employee report. Sorry. And the Arizona state unemployment is near the bottom. So I told you that I have employees in Oregon. So this Oregon state unemployment of 131.24 would count towards my PPP loan. Also with this Oregon WBF, that $1.90, that would also count. Additionally, I have a retirement plan. So any payments that I made towards my employee's retirement plan would count. In QuickBooks Desktop, you would use a report called Reports, Employees and Payroll, and then Payroll Summary, and it's this total gross pay number. And this data is from a sample company. I didn't use anyone's actual payroll. And then at the bottom of that same report, it would show the unemployment. This sample company has employees in California, not in Arizona, so that's why there's two numbers here. Okay, so the Paycheck Protection Loan Forgiveness document is here. There's also a website that I will pull up for you in a minute where you can sign up to calculate your own forgiveness and upload your documents. And then it will create basically like it'll create the correct paycheck forgiveness application form and prompt you to upload all the backup so that when you're done, it's this big DocuSign with a zip file and all this stuff. So that it's everything you would need to just hand to a bank. However, most banks are saying you need to apply for forgiveness on our portal, but you can go through this paycheck protection forgiveness calculator on your own, and then you know where you should end up in the bank's portal, because sometimes the bank's portals ask questions that are outside, not that they're outside, but they're just structured and worded differently. Or it may say, which one of the 18 forgiveness applications do you want to fill out? And you might not know, but the forgiveness calculator tool will walk you through that. So you can elect an alternative covered period, which is having 24 weeks instead of 8 weeks. Congress was expected to pass. They did pass the extension to 24 weeks. If you received an EIDL loan, you can't count the same expenses towards the EIDL loan and the PPP. And there's a great tool at aicpa.org/SBA. So the AICPA is it's the American Institute of Certified Public Accountants. So it's like our, it's like our club for CPAs, and they put out some excellent tools there. Here's my contact information, so you can make a note of it. Feel free to email or call if you have questions. And I'll stay and answer questions, and I'm going to show you a couple other things. And then Donna will email out the slides, and it'll be in there as well. And then here's some links. I'll go back to that other one in a minute, but here's some links to the different forms that we talked about. So here's the I-9, here's the Department of Labor overtime rules. There's the W-4, there's the 1099 miscellaneous forms, the FAQs on the W-4 forms, and then there's this last one is a income tax withholding estimator. So here's this again, and then I'm going to pull up the forgiveness calculator on my other screen here. All right, and feel free to ask me any questions you have. And just because I said that, like, I'm not going to be able to find it now. Okay. I gotta wait for my lightning fast internet to connect here. Okay, so here's the tool that I wanted to show you. So it's pppforgivenesstool.com. And it's powered by CPA.com. So on here, you can just click get started. You can enter your email and get started. And everybody can do one for free. So because I'm a CPA, like I can sign up and then I can create multiple ones for each one of my clients, but you can still use this tool and it walks you through like, did this happen to you? Did this happen to you? Does this thing happen to you? Those kind of things. A couple other things, there's some safe harbor bits in the PPP forgiveness. So if your business is still restricted capacity, that's an option. So you can check that box and you'll file a simplified return for request for forgiveness, a simplified application. The second thing is the SBA just announced and Treasury announced that loans under $50,000 will also have a simplified forgiveness. So just be aware of that, and things are still changing, unfortunately, which makes it really frustrating and complicated sometimes. But just remember to take it slow. There's no rush to apply for forgiveness. We're being told by the AICPA that the only people that should be like applying for forgiveness right now at this very moment are ones that have to go through a second round of layoffs, or businesses that have to, that are being sold, for example. So let's say I was selling my accounting practice, and if I have a PPP loan on the books, the buyer isn't going to want that. So when you apply for forgiveness, like just keep that in mind. There is bipartisan support to forgive automatically loans under $150,000. It was in a bill that got stuck in the Senate. It looks like despite everything that the business community and us as CPAs are telling Congress, that they're going to take up other things at this moment instead of passing automatic forgiveness. The other thing I want to tell you is that also at this very moment, any expenses that you use to pay, any expenses that you use PPP money on are supposed to be excluded from your tax return. So let me say that again. So let's say you got a $60,000 PPP loan and you spent $60,000 on gross pay. You're not supposed to put that $60,000 as a business expense on your 2020 tax return. That's how it is right now at this very moment, which is not the intent of what Congress had, but it's because of this weird law that the IRS has, okay? So Congress also was supposed to pass clarification that those expenses can be included in your tax return, right? So that also got stuck and looks like it's not going to make it through, unfortunately. So those two things right now, I expect them to change regardless of the outcome of the election. Like I expect both of those things will change. So that's why I'm saying there's no rush to apply for forgiveness, because it looks like forgiveness rules will change again at some point. This is what we're being told as CPAs. And so someone asked if the link covers the Form 3508 and the 3508EZ. Yes, it does. So the PPP forgiveness tool, it'll walk you through and help you determine which form you need to file. Okay, so it's pretty great. I think that it's really nice. And then on that website too that I was telling you about, the AICPA /SBA, on that website, aicpa.org/SBA, that website has an Excel spreadsheet that kind of does what this PPP calculator tool does as well. So if you prefer something a little bit more granular, you can use that as well. So, okay, that's kind of the end of my spiel today. If you want to make your opinions heard about automatic forgiveness, or being able to deduct all of your payroll expenses for 2020, by all means, call your members of Congress and tell them to deal with it. It's had bipartisan support, so it's not even a political issue at this moment. It's just a matter of Congress getting the bill worked through the process. So, they took it up and then put it back down again. So I think if a lot of us called, maybe they would pick it back up again. So, and maybe they'll do it in the lame duck session, which between the election and the start of the new Congress. So who knows? Anything's possible, right? Probably a lot of us are wondering where this year has gone. I can't believe it's already like almost November, but okay. So let me know what else I can answer for you. And if I answered all your questions, then by all means, you can go enjoy the rest of your afternoon. But let me know if there's anything else. So.
And while we're waiting for more questions, just so you guys know that we're going to pull up a little poll just so we can get your reactions on everything going on in terms of how you felt about today's presentation, and be honest with your feedback, because we love Tanya. We would love to bring her back, but also if you want some other information down in the future, feel free to add that in there. And yeah, once we have that information, we'll move forward. But if you have any other questions, last minute burners regarding any of the topics going on right now, please add it in the Q&A. Otherwise, please take a screenshot of Tanya's information. And Tanya, you're very friendly, right? You'll be happy to answer questions offline?
Yeah, absolutely.
Awesome.
So, hey, Marcus, you guys have classes just about the PPP and PPP forgiveness, don't you?
We had I think we have a recording off our website regarding the PPP forgiveness back in July or early August. It is a little different now because now there's the 3508 EZ and the 3508S. But just so you guys know, we have plenty of counselors here, including myself, that can speak to you more in depth about the process of filing for forgiveness and what documentation you need. So we'll be happy to speak about that down the line too. And also the SBA will speak about that too.
Great, thank you. Marcus, can you put up our contact information on the slide that you had very quickly? So thank you so much, Tanya. As usual, it was very helpful. We got through it with no internet dropping, so that was amazing. It looks like there is one question that just popped up from CJ again. Oh, it's not a question. CJ's just stating, CJ's one of our business analysts, and she's saying that Amber Kellogg, another funding analyst, is putting together a PPP forgiveness presentation. So we will have that shortly to provide. So
CJ,
yeah,
I would tell you, I don't know if you've seen this. CJ, I was going to tell you, if you haven't seen this PPP forgiveness tool, it's pretty awesome. So like you guys should check it out and see if you can implement it and use part of it too.
And CJ loves tools.
Right? If I wasn't having such a challenging technology like couple of weeks, I think that that I might agree with you. But like right now, I'm just like, on Tuesdays, my internet broke for 5 hours. It came back on at 3:30, and I was like, forget it, it's over. Like, it's just...
Yeah, I'm done for the day. Well, yeah, we really appreciate you. I don't want to say trudging through it because this information is very helpful. But we appreciate everybody hanging on. And like I said, I'm glad we had no technology issues. Marcus has put up our contact information. If you would like to meet with one of our counselors, as he said, it is no cost. There's our phone number that you can call. However, we do request that you fill out a request for counseling. That's electronic. That goes straight into our program assistant, and she will get your information and get you assigned to a counselor within, right now, because of we're actually getting a lot of requests, which is a good thing. It's usually about 3 to 5 days to get back to you in terms of that. And if you don't hear from us, certainly give us a call. But again, we really appreciate Tanya. Thank you, Marcus, for helping out as well. And just keep your eye on our website, and we have new trainings available all the time. So thank you very much. We'll see you all later.
Thank you.
Take care.